Jeff Currie, Goldman Sachs, Global Head of Commodities Research, joining us now. Jeff, where do you stand in this? The market suddenly feels very, very excited about a lot of upside potential.
Well, this market is really bullish. People ask me, what is our favorite commodity? Oil, oil, and more oil. Why? Demand is surging right now. We estimated at 97 million barrels per day. That's up from 95 just literally weeks ago. That's how quickly it's rising right now as we go into the summer travel season. You put that type of demand growth against a nearly inelastic supply curve outside of OPEC, meaning that we've seen no investment in the U.S. shale patch. There's no long cycle, FID, at least in the very near term, that can bring on new supply. 25% of OPEC can't even reach their quota. That really leaves core OPEC, meaning the GCC countries and Russia, as the only game in town. As a result, inventories are dropping like a brick, down 3 million barrels per day. Time spreads, which is that shape of the front of the forward curve, very tight now, reflecting very tight markets. So we see a lot of upside risk over the next several weeks. In fact, our average price target for third quarter is $80 a barrel.
Do we see a spike to 100, Jeff? Possible?
If it's going to happen, everybody's talking a year out. No, this market's going to be really tight between now and, let's say, October and November, when we start to see some type of increase in supplies elsewhere and potentially the Iranian barrels coming on. Because you're not getting those Iranian barrels anytime in, let's say, the next several months, which means the tightest point for this market is going to be when demand really pops. As we go into peak travel season this summer, we don't have the supply. Markets already, think about even OPEC. If they start bringing the supply on in August or beyond, this market's really tight between now and like Labor Day.
Jeff, the shale guys are going to crack soon, aren't they? The temptation at this point has got to. The private guys will go first, and then we'll get. I think we're going to get a test of the public companies and their new moderation. Do you think it's going to hold?
I mean, the private guys, you've already seen them go. They're too small to matter. What you need to see are some of the bigger investment grade companies. And whether, we're not just seeing this in the oil patch shale. We're seeing it in metals and mining, agriculture. These companies are focused on ROE. It's time for these C-suites to be heroes. Mm-hmm. These companies have had an absolutely miserable time over the course of the last 5 and potentially 10 years, depending on the commodity market. So, of course, this group's going to be focused on ROE right now. The question is, how high do you need to get that ROE before you start to look competitive against, let's say, the new economy? Bottom line, you take Netflix and the FANGs, they're still a way better business model than drilling for oil. And if you want to see capital get redirected back in this space, you need to see good returns. And also, you got to remember, the guys that these current C-suites are replacing were a group, whether it's metals, mining, energy, or whatever commodity you want, that were focused on volumetric growth. That's no longer the game. You need returns. You need return on equity, and it needs to be high.
So, Jeff, I'm of the camp, too, that shale's not going to play in the same way, that they're going to be much more constrained now at 75. But what's to prevent OPEC Plus from putting out more oil? I mean, Russia doesn't need 75. They're going to be good with 50, 60. They might make a play for next week to put more oil into the market. Why wouldn't they do it?
Okay, let's take it. We're at a 3 million barrel per day deficit right now. Let's take August, which is what the news report people are talking about. Our base case is they'll continue to put 500,000 barrels per day in the market. That still leads to a 2.5 million barrel per day deficit. That's an extra 2.5 million barrels per day. By that point in time, Saudi's at 9.5. So let's give Saudi a million, maybe 1.5 million at most. Russia does not have another 1 million barrels per day to bring online immediately and to meet that type of growth. And as we look into September, that's why I say the point at which this market is the tightest really is that, call it Labor Day time period.